Hello, this is Coach Mike from WinningsTockCoach.com. Going to get started with the weekly market overview for the trading week ahead. The trading week that is shortened this week, but begins on February 17th, 2015. Anyway, starting out here with our SPX weekly chart, we had a high side target if we continued up above that broken swing high. 2101.04 was the target area. We look to come plus or minus a half a percent, that's 0.5%, which we've been able to do steadily, 52 different market moves in a row now. Anyway, with looking at our price that we closed at on Friday being very, very close to that 2101.04, we need to begin to watch just a little bit for the reaction we get early in the week. If we do begin to pull back from that area, then we may see as low as about 1904.34. Further positive move could take us up to that longer term target point 2231.37 for the S&P 500. I do want to break this down though. We're going to go to a daily chart. Ironically, Friday was kind of a weird day. These are my weekly swing points that are in here, but if you go to my actual my daily swing high point, which would have been 20.90 and 57 cents, we actually spent most of the day under that on Friday. We had just pretty much an even open. We actually made a little bit of a move up and then fell. And it wasn't until really the last hour and a half or so that we made an up charge. It was kind of weird, so it'll be interesting to see how we start out on Tuesday. You do see here from the daily, though, that 2101.04 area, we're just shy of it. So if we were Tuesday to have kind of a flat day that was a little bit up, it wouldn't surprise me at all. But if we were to kind of begin charging upwards again, I don't believe it would do it in a single candle. I even think it might even take a few weeks, but 2231.37 would be the target area we look for. Back on that weekly chart, we want to kind of view a couple things in relation to really what we could expect over the next few weeks for a move if it moved up. You'll actually see that these last two weekly candles have a really good resemblance to this here, which typically when we start an up move, a longer term upswing, we do begin with a couple powerful weekly candles. But those remaining candles, like I said, I didn't think it would go up more at the same rate. I expect that, it would be a slower charge up that would have some smaller movement overall on a weekly basis. And I think that's where we would be if we did make it up to that 2231.37 area. Now over to the DJI, that's our Dow Jones Industrial Average. We actually, unlike the S&P 500, which closed above the last weekly swing high point, the DJI failed to. We are really close to that $18,073.62 target point, though, that we've been talking about the last couple weeks. I think it's going to be really important to watch to see if 1853.71 and also that 1873.62 can be broken. There could be more topside, much like the S&P, should that be broken. But looking at the DJI stocks that I follow, the last week and a half, 2 weeks, they ran pretty considerably. Goldman Sachs, which I follow really well, really shocked me. I was completely wrong, admittedly, about the move that Goldman Sachs made, and moving roughly $20 in a week and a half, 2 weeks. I just don't think that it can sustain much more of an up move without a decent pullback. Therefore, I would be watching this week and would not be shocked at all to see a little bit of a pullback on the DJI, even if it was going to eventually make a higher topside move. I think we would have a bit of a pullback that snagged us up for at least a week. And this upcoming week being a shortened week, a holiday week, because of today, Monday the 16th, being the markets closed are for President's Day in the United States. It just wouldn't surprise me on the shorter week to have a little bit less volume and a bit of a decline on some of these runs that were made. Now moving over to the RUT, that's the Russell 2000, the small cap index. We talked about the importance of that swing high break after this long period of consolidation. We got that with the close on Friday. I think that if you got more continuation, it would be about to that level of 1238.23 on the RUT. Because of the swing high break, if we did, even though it is a shortened week, if we had some higher volume with further push up, treat that like a momentum trade and use that 1215.21 weekly swing high point on the RUT, use that as your support point for the momentum trade. So basically the close Friday would be your breakout, and you would watch that close from the week of December 22nd, which was 1215.21, as your support point. If you failed below there, the momentum trade's over. And if you continued upwards, if your volume in small caps starts to die off, that's where you would exit your momentum trade. And now finally over to the NDX. This is the NASDAQ 100. We actually were able to break target point number 1 and the weekly high swing point. So much like the Russell 2000, if we were to continue upwards at the start of the week, we would use the NDX closing point, that last swing high point, 43.37 and 78 cents, as our support point for the momentum trade, seeking an overall target 47.25.71. I do not think it would make it all in a single candle, could it? Yeah, maybe, but I think it would be a multiple week trade, probably another 4 to 5 weeks if it were to continue up to that point. But after this consolidation, the breakout above is definitely a bullish indicator. So if you don't feel like, what people would call chasing something, if you don't feel like chasing it here on the breakout, let it happen. Get yourself a modest pullback and enter there. But I think we'll weasel our way up to that 47.25.71 area. And, the only real kicker, I think, that will diminish these moves in the market is the Fed raising interest rates, should they ever do that, when they ever do that. But until they do that, I think you've got to continue on with what the markets are showing, which is a continual bullish pattern after bullish pattern. We had a few tricks pulled the last month and a half or so when we were waiting on Fed news and whatnot. But overall, those little mind tricks that were played were basically throughout consolidation. So as long as we keep making new highs and higher lows, we've got to continue with that mindset that we got to have our bull hat on and save the bear hats for another season. This is Coach Mike from WinningStockCoach.com, wishing you the best of luck in your upcoming week of trading, and God bless.